Welcome back to BLOCKTV. It's time for Blockheads, where we round up the top headlines from across the crypto sphere. Lots going on in this sphere this week as Cointelegraph reports New York court rules that state attorney has jurisdiction over Bitfinex. CoinDesk details early investors in Telegram crypto see 400% returns, but buyers risk it all. Globes lets us know that Israeli Bitcoin holders take on banks, while CTech informs Israel is set up a fast track to the licensing fintech projects. And CCN tops off today's list with Japanese giant Rakuten officially launches cryptocurrency exchange. Things aren't looking so good for Bitfinex as the New York State Supreme Court has ruled that the New York Office of the Attorney General has jurisdiction over the exchange. The ruling will allow the New York Attorney General to continue its investigation on Bitfinex and the alleged cover-up of the $850 million loss involving Tether. In the filing, Judge Joel Cohen dismissed a motion by Bitfinex to terminate an action by the New York Attorney General that would prosecute Bitfinex under the Martin Act that grants the Attorney General expansive law enforcement powers to conduct investigations of securities fraud and bring civil or criminal actions against alleged violators. This is just the latest in a protracted legal battle between Bitfinex and the state prosecutors, in which Bitfinex claimed the Attorney General did not have jurisdiction as the exchange did not serve New York customers. Judge Cohen's ruling denies Bitfinex and Tether's motion to terminate the Attorney General's litigation. We continue with a tale of buyer beware. Telegram's open network is said to be scheduled to launch October 31st, but the Gram tokens are already trading in an unauthorized secondary market. While the messaging giant has yet to publicly or formally acknowledge the project, a secondary market has emerged for their yet-to-be-issued tokens, with investors from last year's $1.7 billion token offering selling their Gram allocations by way of OTC desks, exchanges, and special-purpose vehicles. But there's a caveat. Investors who bought into 2018's February and March offerings are not allowed to sell or pledge their tokens in any way before the launch. The original purchase agreement says that if an investor disposes of their future tokens before the network, the allocation can be canceled. In other words, if investors purchase a token through a secondary trade, there's a risk that they won't ever get them. Telegram's purchase agreement stipulates that buyers may not offer, pledge, sell, swap, encumber, or dispose of their tokens directly or indirectly. And the future issuance of tokens is conditional upon the investor's compliance with this rule. So think twice before making that purchase. Waves are being made in the Middle East as Israeli Bitcoin holders are taking on banks as they petition for freedom of information, demanding that the banks reveal their policies on accounts for proceeds of cryptocurrency trading. In many cases, the local banks refuse to allow holders to open an account in which to deposit money obtained from the sale of Bitcoin or other cryptocurrencies. Several lawsuits have recently been filed against banks that refuse to deposit customers' money from the sale of digital currency, and holders are demanding that the Bank of Israel and the commercial banks make their policy on this matter public. The refusal of Israeli banks to provide services is not confined to private holders or digital currencies. The banks also refuse permission to open an account to the Bitcoin Association, which has operated as an NPO since 2015 to promote cryptocurrency technologies, but does not buy or sell digital currency. Legal campaigns by holders against the banks are taking place in other channels, as well as just last week, a petition for approval of a 75 million new Israeli shekel class action lawsuit against Bank Hapoalim was filed, alleging that the bank refused to deposit money from a customer obtained from the sale of digital currencies. In related news, Israel is to set up a fast track for the licensing of fintech projects, according to the Israeli Ministry of Finance. Currently, there are 2,000 different entities awaiting licensing, many of which are fintech and blockchain companies that need to make only slight adjustments to comply with current regulations. The Capital Markets Insurance and Savings Division of the Israeli Ministry of Finance, that is spearheading this effort, has also stated it intends to examine ways to ease regulations where investments in insurtech projects by insurance companies are concerned. And finally, Rakuten, Japan's largest e-commerce company, has officially launched a cryptocurrency exchange. According to the article, Many users of Rakuten anticipated them to operate a cryptocurrency exchange service following the company's acquisition of a Bitcoin exchange in August 2018 for $2.4 million. At the time, Rakuten was said to have acquired Everybody's Bitcoin to leverage its infrastructure to operate its own trading platform. Japan is only second to the US in being the largest cryptocurrency exchange market, ahead of other major markets like South Korea and Europe. And based on the data provided by CryptoCompare, the Japanese cryptocurrency market accounts for 10% of all global Bitcoin volume. Rakuten is expected to focus on security of its platform and other user funds by integrating efficient safeguards to provide a safe ecosystem for local retail cryptocurrency investors. That was Blockheads for the day. Stay tuned for more news and updates.
For more news and updates, follow us on Twitter.